Ladies and gentlemen of the crypto space, we're live on a Friday, October 10th at 11:47 a.m. with headlines this morning clearly moving markets. Basically, everything in the red. Bitcoin dominance up about a half a percent. I come to this chart. This is a chart. It's not a price chart. It's literally just a singular moving average because on the monthly, when you take a look at Bitcoin denominated in gold, you see that the average price of Bitcoin is up and to the right month over month when you denominate in gold. So that tells us a lot, given that gold has been doing what it's been doing. And gold is sitting at basically 4,000. So gold is up on the day, considering everything that's going on in equities. Nasdaq down 2%, S&P down 1.5%. Ethereum down 5.5, Bitcoin down 2%. Gold is at positive 0.6% on the day. It's green, which means something constructive, especially considering how Bitcoin priced in gold moves historically. Historically, Bitcoin follows gold. Gold leads Bitcoin. So I find this to be a very constructive chart. If you go to a shorter time frame, on the weekly, you can see that from a weekly 10 perspective, you do have your volatility, you have your ups and downs, you have your meaningfully, meaningful drawdowns. But from a weekly 100 standpoint, there's up and to the right. This type of data is what I like to look at, not as often as I used to, but it gives me comfort that, or it used to give me more comfort leading into the way I think nowadays that most of the stories we hear, the things people think are just noise. That's why we have our methodology and our three rules. And when you stare at this weekly 100, you're like up and to the right because that's where the system is heading. Nominal pricing will be up and to the right. Why? Because if it's not up and to the right, the system is failing and we have a deflationary collapse. They're afraid of both inflation and deflation. I'm sure they're afraid of deflation even more because deflation is the end, whereas inflation hides the end. It is the end also, but most people don't understand that. So the majority keep on going and they have that little itch on the back of their head that something's wrong, but they don't quite understand it. More and more understand that with social media nowadays, inflation, the silent debasement, the consumer price inflation, but it's certainly not understood by the majority. It will be at some point, and that leads to social incivility, social unrest, and that's where we're heading. That's the destination of all this. So suffice it to say, markets are decently in the red. Let's put price action back on and see where we are from a decent moving average standpoint. Go to the daily. From an aerodrome standpoint, we see we are still in a resistance flipped support situation. We had an interaction there, so we'll leave that technically as what my color coding lately, that'd be a perpy circuit. So green would be a resistance and perpy would be a support. So we don't have an interaction yet. Need to get down to about 98 cents to have an interaction with the daily 100. Not that I want to see an interaction. I'd rather see it hold as support a little bit higher, maybe a dollar, 101, 102, basically where it's at. And that would be constructive that we never got to that moving average interaction. Velodrome just at its weakest presentation, it's at its weakest levels. I still love Velodrome. So that is where we're at. This is an in it for the technology kind of play. It is what it is. Still part of the three rules. I am very comfortable with that exposure. Cash flow. This is basically the stickiest, the steadiest cash flow from a VE curve standpoint, and this is unfortunately trending towards 4,000. It was nice when it was at 4,500. I really liked it at 5,000. I wish we go back to 10,000. We are way off highs, at least local highs, definitely way off historic highs, and we are at the lows. So cash flow from a BE curve standpoint, at least from a vote rental standpoint, is at the lows. I very much excited for yield basis next Thursday when we get the $300 million credit line up and running and yield basis emissions turn on. Um, it's got to be really interesting. I'm here for it. I that is that's everything. I think that is one of the biggest technological offerings or technological innovations in crypto in probably a long time. And I'm not surprised that Michael came up with it. I'm certainly not, and I have no hesitation to say that he deserves everything he's going to get with regard to team allocations. Who else could make something like that? And that's something that I appreciate being a software engineer for a profession myself. Who could make something like that? Only he could have. So that means something, and that's okay. And he will do very well. And because he does very well, everyone else will do very well. And I expect to do very well because of it. And that, Michael, as well as the products that he's made, is certainly the hand that feeds me. And I expect it to continue feeding me and feed me even better into the future. So I personally say thank you, and I appreciate your capacity. I'm speaking what third person to him, I guess, and that's how I feel. That's my sentiment, and I think that makes sense, and I think it's rational, and I am very much looking forward to next week. Yay! From a chart perspective, curve looks quite constructive on the weekly. We are still above the 10 SMA. We are pinched below the 50 and the 10. Still have a very clear higher low series. One, two, three. Lower high series. That's what, a flag, a triangle compression. I mean, what? If you want a measured move, this is the flagpole. That's a nice flagpole. Let's measure it for the fun of it. I'm not one for seeing measured moves play out, but we'll draw it. So, jeepers, that's 500%. So you get what? You break out. So I don't know. Maybe there's the trend line from peak to peak. I, no way. This is logarithmic. That's why logarithmic. Regular. Yeah, no. That clearly only looks like that because of logarithmic. Um, so let's go back and you have your measured move. Let's see if we can do this. Then we can migrate that non-logarithmic. All right, fine. So that takes us to like what, two and change? Can I? We see two and change, and I'm definitely a good old messy. Uh, I'd be dancing in a banana suit or something or whatever. That'd be wild. 111% off where we are the breakout, a buck oh 05 up to 220. I'd be very happy to see that. Okay, so that's quite a constructive chart. Aave looks good as well. I think many good things about Aave. It is clearly the leader of DeFi credit. Um, in almost all regards. It is the face of crypto fintech banking. So this is definitely a chart to always look at to understand where we are in consumption and acceptance and appreciation of these crypto markets for what they are. Um, that is what Aave is. Very critical to follow the story of Aave and what it's doing on social media. So, from a macroeconomic standpoint, this is probably the most constructive stuff we could look at on a day like today. Thus far, we've held the weekly 100 as resistance. We did wick through it, obviously, yesterday, but we are below it. Let's see what it does. This would be a very constructive thing to hold as resistance. It holds as resistance. That's crazy. And we've been here for quite some time. Check this out. Date range, start to wick through it here. Talking about 168 days, ladies and gentlemen. Okay, it's over 300 days, or at least that's over half a year. Um, no, it's almost a half a year. Yeah. So, damn, that's how long we've been waiting for this final capitulation of directionality or structural cyclical trend change reversal from a market that is looking like it's ready to break out, crypto fintech as well as um, yeah, some of the tech stocks and whatnot. But for that to really start to outperform and align with the monetary expansion, because we haven't had the great monetary expansion. You have the great monetary expansion under very clear macroeconomic conditions, where move is not just reaching the lows, it's starting to roll over and capitulate. We'll look at the move indicator in a second, but this is clearly stickiness. This is clearly the market saying, all right, we breached the weekly 100 to the downside, but it wants to go up. It's you know, it's like water droplets on the ceiling, condensation on the ceiling. It's sticking to the damn ceiling, or rain clouds that have yet to open up and pour. Once it starts raining, everyone's like, "Oh shit, it's raining." But until it starts raining, everyone's like, "All right, we got rain clouds. It's not raining yet." So that's where everyone's at. That's where the investor community is at. They're like, "All right, this thing could roll over, but it's pretty damn sticky to that weekly 100. So let's see some lower lows. Let's see that capitulation to the downside through this trend line, and note, where does this trend line originate? 2011, as more or less 2008, 2011, somewhere along those lines. I'm not a fan of trend lines too much, but that's a heck of a trend line. You know, you start heading towards the weekly 200. Clearly, that's a trend line of validation. That's the 100 SMA holding as resistance, and that's certainly capitulation into the system, starting to allow foreign currencies to appreciate. And it's also a sign that you have geopolitical collusion, that there's a structural devaluation of the dollar going on, because there's no way for the dollar to devalue organically. There's too much demand in the system for the dollar to finance outstanding monthly uh, uh, debt servicing requirements. The only way you get the dollar to go down is structural intervention by the monetary authorities and, frankly, the fiscal authorities also. It's intentional, it's policy driven. So the move indicator, moving averages on an oscillator, point is, breach that 200 SMA on the weekly to the downside. It took that 1,365 days, like we talked about. But as you can see, at least historically, if we're looking to 2020, and that was a very manual, intentional intervention by the powers that be, you started to see that significant move. And that's what drove the market. That's what drove the global monetary supply expansion, these outsized moves to the downside. And very similarly to the DXY, we see that stickiness towards the upside. So you have the market not having that confluence, or that um, that comfort saying, yeah, it's moving down. It's that rain cloud that has yet to open up yet. So when this rolls over, the DXY rolls over. And frankly, I thought the most constructive on the day was the 10-year yields. I really want to see this start to roll below 4. You start to see this roll below 4. You got systemic collateral appreciation, so much debt increase in the system after 2020. That's getting really interesting. So as the collateral appreciates, the volatility on that collateral goes down. You start to see the banking system want to accumulate or lock in those relatively high interest rates and absorb that collateral and use it. Take the collateral to what? Issue liabilities. So they're going to take some assets onto the books. They need to shore up the liability side of their books. They got to balance their books, and this is how they do it. They just want to lock in the highest interest rate possible. And when they lock in the highest interest rate possible, that's usually where you get the outsized move, because that means they could offer the best deals. If they're locking in 4.5% or whatever the hell they could lock in, um, they could offer a 1%. That's a hell of a deal. A 1% discount? Oh, on currency? Because a liability, a bank deposit is no different than an actual dollar. And frankly, actual dollars are still liabilities of the Fed, but that's another story. That's neither here nor there. The point is the bankers could offer a discount, they could offer a better rate, they could offer more credit for posted collateral. And that's what's so interesting about the DXY, the move, and the 10-year when you understand the knock on effects and the interactions between these um, monetary primitives. The money in the system, debt instruments, treasuries, sovereign debt, and the currency in the system that the banks have printed. The Eurodollar banks that have printed 300 plus trillion dollars, actual dollars that you and I use every single day. $300 trillion. Dollars. Put that into context. The banks around the world have printed 300 plus trillion dollars, and the United States has what, 37 and change trillion dollars worth of debt. It looks like the United States has only printed a little bit over 10%, let's say 10% of the amount of debt or the amount of currency, amount of dollars. Does the United States really control the dollar? Very interesting question. I don't think it's really open ended. I think it's pretty clear the United States doesn't control the dollar. And that's the illusion. And that's what most people, I think, don't understand. The world outside the United States has printed way more dollars than the United States has ever printed thus far to this day. Our debt is merely a drop in the bucket compared to the amount of debt, dollar denominated, that the world has printed. Is that capiche? Is that capiche? We've printed, everyone's like, oh, the US debt. They've only printed a part of the amount of dollars in the system, as I said, about 10%. So we're not the biggest problem, or the is it the biggest problem? We can't control the world borrowing dollars, and that's what they've done. And by borrowing in dollars, they're printing dollars. They've done it to themselves. The world has done it to themselves. So in so many regards, you got to understand this. And this is like flipping the script to try and really understand what the hell is going on. By the US issuing debt, it's really just a product, supply and demand. The world has all this debt outstanding, and cyclically, they probably want to borrow dollars, print dollars instead of buying them from the forex markets. Because if you're buying them from the forex markets, you jack up the price, and that fucks up the whole system. So instead, what you do is um, FX swap. You swap foreign currency to dollars. Use the dollars to buy U.S. debt, and then you post that debt as collateral to borrow dollars. And cyclically, that interest rate that the foreign actor is paying um, is favorable. That's how it works, because that's the only way it makes sense that it works. Why is there so much debt outside the U.S.? Why has there been so much currency printed outside the U.S.? Because cyclically there's a favorable interest rate, and that's what everyone chooses to do. It's cheaper to do that sequence of events than it is to buy dollars on an FX market. Otherwise, folks would have just bought the dollars, and the dollar would be at 150, but it's not. Okay. So that's how my mind understands it, and that's what makes sense to me. Gold at 39.85 up and to the right, topped at 40.50 and change. Nice gap down here. It's a heck of a gap. It's creepers. Now let's see what it does. Because we opened this stream with Bitcoin denominated in gold. So when you start to see a gold reversal, guess what? That's where Bitcoin has a chance to outperform. And that's exactly what we see in the Bitcoin chart when you denominate it in gold. See, over time, gold trends up, and Bitcoin trends up and to the right as compared to gold. There's your trend. That basically means gold leads. Gold leads, Bitcoin follows. Blah 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 blah. Okay. So everything in the market is noise. Market looks lovely. I don't have anything really on social media to talk about. I don't know what that was. I posted that. 10 years. That's an outsized move. 2%. Heck of a move on a 10-year. Capitulation in the morning. We talked about the DXY. Oops, zoomed in. Folks are Pangea. Pangea is talking about data on yield basis, and the data looks. This is early initial data is like, holy shit. That's what the data is showing. Curve cap doing his thing. This data is crazy. I am very excited for next week. Bitcoin's no longer at 120, and nor is gold at 4K, but it's pretty damn close. So I think this meme still is applicable. And here we go. There's your 300 mil credit line, which will click over next Wednesday and go live Thursday morning. I think that sounds about right. Looking good. Looks like it's going to pass. The yield basis. Here's the yield basis vote. This is going to pass also, obviously. And here's your gauges, your YB. And here's your token generation event, more or less. 300 mil. I mean, come on. Aren't we all going to deposit our collateral next week? I literally don't understand how I didn't get in. I guess I was just sleeping late. But I look forward to deploying capital to this system. Very exciting. Very, very exciting. All right, commentary, ladies and gentlemen. If you're on X or on YouTube, please feel welcome to ask any questions, comments, concerns. More than happy to talk about anything on this day of capitulation. Capitulation. George, good morning. How are you? Much a pleasure. Mike, buenos días, capitán. Gusto verte en otro día o viernes. Ah, ok, hablamos de, ¿qué tú sabes? Viernes, fin de semana y mañana. Disfruta, sienta en un sauna, ¿ok? Ejercicio. ¿Qué otro hacemos? Paga tiempo con la familia, ¿ok? Bueno, disfruta, disfruta. Live during the crash. There's no crash going on. There's no crash. This isn't a crash. $119,000 on Bitcoin. There's no crash going on, my friend. There's no crash. We'll know when there's a crash, and we'll be talking about a crash, and certainly not crashing today with gold at 39.90. I mean, literally, Nasdaq and S&P were down 2%. It's hovering around 2%. All right, these are small numbers. Small numbers. Weekly. I love this chart on the daily. I love that daily 100. Let's see what it does. Yay. Good morning, Cap. IF, much a pleasure. Where is yield basis to buy? There's no token yet. Binance is going to sell it. They're selling these things at a premium, whatever allocation they have available. Then obviously there was the sale last week. I wouldn't buy those things. I'm not buying something at a 200 mil market cap, which is probably a mistake on my part, but I don't have the amount of capital I would need for an appropriate position size at a 200 mil market cap. So I have to accept that. If you don't have enough money to acquire an effective and appropriate position size, considering the structure and composition of your portfolio, you're priced out. So that's okay. So I have my approach, and I will be deploying Bitcoin to yield basis. And I will have the yield basis that I am granted based on emissions, based on voting. I'll clearly be voting from a V curve perspective, and that's it. And that's okay. And I will not try to get access to more than I have been deemed worthy to have. Okay, so there is nothing to buy. And if there was, the same rules apply. X, Y, and Z. How much does it cost? How much is it paying? And how likely is it to continue to pay? So same methodology, same logic, same reason. 20% is 20% is 20%. We know the rules, so it doesn't matter. I think it would be something that is nice if you get the right price, and that's basically the same thing we could say about any other asset. I just suspect that yield basis is going to take curve to where it is meant to be, considering the infrastructure that it is. The beauty of it is yield basis could not exist, in my opinion, without curve. Things have been said, a couple of tongue-in-cheek remarks, but I don't think you really could do it without curve. CRVUSD is a very unique product. It's not just like the soft liquidation. It's not that. It's the dynamic interest rates. It's the way the peg keepers work. Now, there's no other stablecoin like CRVUSD. And that's what so many people get wrong about stablecoins. They're so wrong about stablecoins. This whole you got to back it by collateral. And sure, that's part of the liquidation process, but the why do you have the liquidation process? Because those are forced buyers. When you back it with collateral, you're able to turn a person into a forced buyer. The whole point of the collateral really isn't just the collateral. The point of the collateral is to manage downside peg. The whole point of a stablecoin or the art of the implementation of a stablecoin is how do you manage peg, the value of it being $1. Now, to manage upside peg, that's easy. That's the peg keepers. You could print as much as you want. You'll never go over the dollar because that's very easy to manage. It's the downside peg that's hard. So you got to threaten people with liquidation and you got to force them into buying CRVUSD. Now, that's where soft liquidation's like, oh shit, now let's take that forced liquidation and turn it into something attractive. And like, oh, that's really cool. That's innovative. So not only do you have a great downside peg system with the adaptive interest rates and the way they work, you also have an innovative way those adaptive interest rates are applied and reversed in a soft liquidation fashion. My God. I mean, what am I supposed to say? It's brilliant. It is brilliant. There's no one else that did anything like that. There's something comparable, and that's Frax's products with the AMOs. But the other stable coins are not like that. If you ever see a stable coin above $1, that's an issue. And clearly below $1, the stable coin has to be $1, which brings me to always think about USDT and USDC and how much market making they must be doing. Those boys must have one heck of a market making operation for those prices to be the dollar that they are. And they understand that. It's a manual centralized implementation. What's so beautiful about things like CRVUSD, Frax, Aladdin's products, Dollars products, and a couple of other stable coins is that it's deterministic and managed automatically by software. So it changes the equation. Flips the whole script, ladies and gentlemen. Anywho, so I'm very excited for next week. P2P, good morning, much pleasure. Thoughts on plasma noise? I like the network. I love any network that's centered around the concept of stablecoins and payments and capital management, and that's Plasma. So where's the credit products? Where's the prepaid debit products? And where's the integration with merchants? So that sounds great. I don't want to own like was it XPL? Not interested in that. Would that be part of the cash position? Certainly not interested in that. So Plasma's cool. I don't see anything that's investable um, in it regarding it. That's okay. Simple as that. Heath, top of the morning to you, Cab. Do you have thoughts on Dot? Dot's old school. I retain Dot exposure. It's pretty interesting from a staking perspective. I'm not up to date with the technology and the progress thereof. I think I get like 3, 4 bucks a day from it for all these years, and it's just been stacking. I don't know. It is going to be what it's going to be because it's not integrated into dexes such that there's no cross chain such that I can liquidate it without using a centralized exchange. So it's not happening. I'm just going to retain it and it's going to become what it's going to become. Similar with regard to Atom, Cosmos, I retain it, but nowadays you could actually liquidate Atom and could have USDC on mainnet or whatever So it's nicely integrated. Um, but I'm interested to see where it goes. A lot of people have written off Cosmos. Uh, I'm not quite there yet. A lot of people have written off Ren. I like retaining positions. I'm that guy that rides things to zero. I'm just not that guy that has an entire portfolio that rides things to zero because that's how you fuck up a portfolio and destroy all your money. But I'll take a position and I, I own it. I bought it. You don't have to sell the things you buy. I did that with Cleopatra on Mantle. Man, I wish I bought Mo instead, or just Mantle for that matter. But I didn't. And that Cleopatra's literally worth zero. And that's okay. You don't win every trade, and that's very much okay. So that's my 2 cents on dot. It's one of those things that I've had for a long time. I remember when there was a what 1,000 to 1, was it 100 to 1 reverse split or something when it first went live. I don't know. We'll see what comes of it. Uh, Adrena is a perp dex on Solana with 100% revenue share and 4-year locks. Any thoughts? No interest. With regard to Solana, my only interest is Samsara and Nirvana. So I'm a seed investor with Samsara. I have exposure to this product. I don't know if their DevNet's up, but that's the Nirvana product, and that's not live yet. But this is something, this floor and this credit facility, I very much appreciate what they're building, and this is this is pretty much the only thing I'm interested in on Solana. I mean, it's just all garbage on, so I don't give a fuck about the assets and the stupid exchanges. I just don't care. What are you getting? 20%? All right, great. I just got 30% last week from Aerodrome. Close. It's 30% from Aerodrome. Gives a shit if you can get 30% on Solana. You get 30% right there on Aerodrome, and Aerodrome has the Coinbase narrative. So that's very simple thing to say about Solana. Cares? 30% is 30% is 30%. I might as well get it on base because then at least you're tied into one of the largest narratives in these crypto markets, Coinbase. So with regard to Solana, the only thing that's even remotely interesting to me is this product from Nirvana. My 2 cents. My 2 cents, ladies and gentlemen. Hannah, always a pleasure. Good to see you. Hope everything is well. I appreciate the news, the Noah, uh, the end. It's all good. I appreciate you too. Do you think this is the final capitulation of sorts? There's no way to know. Final capitulation, the most recent capitulation. I don't think in those terms. You know, I think in terms of what's today, Friday? What I get paid yesterday? What I get paid on Wednesday? I got a paycheck from work today. Nope, I get that next week on the 15th, bi-weekly paychecks. All right, you live your life based on paychecks. You know the deal. You know exactly what I'm going to say. I don't care about final capitulation, first capitulation, last capitulation. I know where these markets are heading in the future. And folks will say the S&P or equities have been outperforming crypto. Great. That's great. I've invested in equity. I'm in my 40s, not the oldest, but I've invested in equities the way I know how, based on my knowledge and my experience. And I had great buys, but it wasn't the right environment. So one of my largest purchases in equities was ended up being a hostile takeover, and we were gutted. The retail investors were gutted. So ever since then, I've been very salty about equities, and I favor crypto. I favor crypto over equities. I go fuck that equities are outperforming. I own crypto because it takes the person out of the equation. Now, clearly, there's a person in the equation with regard to launching and business development, etc., etc. But once a protocol is functional, once a protocol is paying you and it's immutable, it's deterministic. It cannot be changed. And that is something you cannot get in equities. In equities, everything could be changed. Nothing is deterministic. Everything is up to a board of humans, and humans are a problem with regard to investing. And there are no humans in a deterministic, immutable smart contract, which is the promise of things like liquidity and certainly base VECRV, which is an ancient implementation at this point. It's quite immutable and deterministic to pay you week over week, every week on Wednesdays and Thursdays. And that, my friends, is the most valuable thing that I could possibly buy in my entire life. Guaranteed payment on Wednesdays and Thursdays. Sure, payment up, payment down. I wish I bought more. It is what it is. I was able to acquire what I was able to acquire, and I must make my peace with that. And eventually in the future, it'll pay more as the market expands because that's the point. That's why we talk about macroeconomics, where the market's heading, not where it is, not the decrease in payments or the increase in payments. I'm here for the structural expansion of the market. When it expands tenfold, a hundredfold, and you have a good part of global economics dealing in these markets. That's what I'm here for. Until then, I'm very grateful that these deterministic and immutable products pay week in, week out. Maybe it's less, maybe it's more, but it's every week. All you have to do is buy more assets. Gold, Bitcoin, silver, all time highs, revenue still being distributed for claim week in, week out. In 5 years' time, you'll say to yourself today, all you need to do is buy more assets. That's something I just believe. And I'm going to experience that for better or for worse. All I needed to do today was do exactly what I did over the last 3, 4, 5 years and buy more assets. And I will appreciate that in 5 years now. And I will look back in 5 years now and say, all I had to do was buy more assets. And all I did was buy more assets. And we'll be telling this story, ladies and gentlemen, in 5 years. We'll be here to talk about this story. Hannah, I appreciate the macro perspective you offer, even though I'm not involved in the kinds of investments you do. Love your playfulness too. Thank you. I very much appreciate it. I know this stuff is some serious stuff. I know equities investors, account managers. I have a friend of the family that's an account manager. He manages like nine, not 8 figures, 8 figures, 9 figures. I'm sorry. And man, he doesn't know anything about crypto. Great dude. He definitely needs a crash course. I'm pretty sure he wants one of those sooner than later. This is not straightforward stuff. This isn't traditional business or balance sheet and profit and loss and how much debt the company has and what are the products they're making in a store, a clothing manufacturer, a technology producer, Samsung. They make all this electronic equipment. Were their sales up or down year over year? What are their price targets, their growth projections? It's not equities. It's a whole different equation. And I try my best to tell a story that is consumable as I understand it. So I appreciate your kind words and my effort and escapades, as you say, in trying to tell this ever sophisticated story. It's getting more sophisticated as time passes. More stories to come. Crypto fintech has not done what I thought it would with regard to income as we thought it may earlier this year. Unfortunate, sure, true statement. Unfortunate. Will it do what we expected and likely continue to expect it to do? Now, I'm not here, ladies and gentlemen, to make as much money as possible, contrary to most people's interests. People want to buy a coin at $100 and sell it for $10,000 and own nothing. They want to sell it for dollars Because once you sell it, you own shit. I'm not here to do that. I'm here to do something that most people don't do, to do it differently, to have rules and methodology and a strategy and a structured portfolio and cash and investments and balance and rhyme and reason and all this complicated structure that most people that look at crypto just don't think about. Business? You structure a business around just owning crypto. Why don't I just own crypto? Why do I have to make it more complicated than just owning it? Because Rockefeller said, own nothing, control everything. All right. So why the hell am I going to own anything? I just need to control an entity that owns the things I want it to own. Anywho, point of that statement is I'm just here to do things differently. And I certainly think about things differently. And I will continue to do as such. And I look forward to my choices bearing fruit in the future. The odds, the odds of my choices bearing fruit in the future are almost certain. They bared fruit last week. They bared fruit the week before. And I expect that to continue, for better or for worse, less or more. But in 5 years' time, I'll be grateful that I bought assets over the last couple of years. Arrow APR down, Velo APR down, Curve Convex APR flat, price down, nothing worth nothing. Kingdom stuff has complexity, so can't properly assess. Same way as yeah, that's because we're in the period of capitulation. Capitulation. Everyone is like, oh, this thing is dead. Crypto is going nowhere. It's all a scam. It's all worthless. Yes, we all know everything's worthless because of the deflationary collapse. All everyone wants is dollars. We all know this is all an inflated economic regime of these currency units don't exist. It's all fairy dust. We all know that. What was it? Who said gold is money, everything else is credit? What was it like? J.P. Morgan? I think it was him. Okay, great. So we understand that stuff. Gold is money, everything else is credit, and credit just is destined to collapse. All right, great. But until then, we still have to have some sort of strategy and some sort of methodology and follow some sort of rules to maintain sanity. And this whole podcast is about my rules. And I'm surely feeling very comfortable lately. I like the way I tell the story. I like the way I think. It leaves me very comfortable. I sleep very well at night. I wake up very well in the morning. And that's how you manage capital optimally. You manage capital. You can only manage capital well, really. It's probably a bad example. I was going to say you can only manage capital well if you take care of yourself well. But then again, we have capital managers historically that are probably pretty degenerate, and if not drug users and whatnot. And I don't know. So I don't know. Maybe that was a very bad statement, but I believe that. I believe if I'm going to manage capital well, I take care of myself well. Health and wellness are critical, and I take the same seriousness in managing capital. I do it with intelligence and strategy and intent and passion because all this shit makes sense to me. And that's why this story is maybe so interesting. What's your hardware wallet of choice? I like those Ledger wallets. Keep it simple. Definitely needs to be hardware. Just what those Grid Plus devices are cool. Whatever you do, just make sure there's very lengthy pin codes on the hardware device, because then what are you gonna do? And then what what's it called? It's called um I don't know. It's complicated. You have security considerations and whatnot, but there's no perfect implementation of anything, including security. But your seed phrase, how do you manage that? Where is it? Surely shouldn't be where your hardware device is. So where do you put it? How do you manage all this stuff? I don't have the best answers, but uh, I would encourage people to at least think about it and to have a reason, a method to their madness. Your seed phrase should be probably on metal. Shouldn't be on paper. It shouldn't be anywhere near where your hardware wallet is. Your hardware wallet should probably be nicely secured and protected with passcodes, which ledger devices are. And other types of security are certainly meaningful to consider. It takes $5 in a wrench for someone to attack you for a hardware wallet. So what does that even mean? I don't know. I don't have the answers to this. How do you manage security for your family? How do you manage security for a property? I mean, shit, you literally have people that own property, retail and or commercial, where squatters come in and just take their property. And you can't ask them to leave because the laws prevent you from asking them to leave. And you can't take a baseball bat to their knees telling them to get out. Although, if I own property and someone wouldn't leave, I'd probably take a baseball bat to their knees and tell them to get out. Now, how do you manage all this security and all these? It's complicated. And I don't have the best answers. All I know is it's definitely something worthwhile to think about. Hope all is well. The hook, much a pleasure. P2P. I still have my Cosmos ecosystem bag staking, letting it compound. We'll see how it plays out. Yep, and my 2 cents. I share that sentiment. Dot is so next cycle. Maybe, maybe. When is Ren? Ren to 10. Where's my Ren? Come on, baby. I hear good things. I don't know. Things have a way of surprising people. Things have a way, or the unexpected has a way of occurring. Like all of a sudden, oh shit, I wish I held on to that coin from back in the day. So that's why I like this whole ownership concept and not renting. I bought things. I'm going to own the shit I bought. I bought it for a reason. And that is something that feels meaningful to me. That's my 2 cents. Interesting things about Solana is all the Deepin projects launching on it using it, which I don't fully get since chain goes down, but it's a good narrative for the chain. Deepin. Well, I don't know. I don't buy this AI shit. I'm not into the crypto AI at all. I don't know. There's five businesses in crypto: foreign exchange, credit, derivatives, liquidity, financing, and liability printing. Everything falls into those categories. Maybe Deepin, I don't know. I don't care. It needs to be simple. If it's not simple, it probably falls into one of the five businesses in some way, shape, or form. More interested in using my SAL on Samsara than LPing, right? Isn't that cool? Isn't there going to be a SAL with a floor? So these are all derivatives. Samsara is the ultimate derivatives protocol. It's probably the most interesting derivatives protocol I think I've ever seen. It's unique. It's novel. It's innovative. I mean, literally, you never have to sell, and all you do is borrow, and the borrowing has zero interest rate, and it's built into the protocol, um, which is crazy, which means it's not income, it's credit. And if you never have to pay it back, okay, that presents interesting questions with regard to AFR and accounting requirements from the IRS. Um, but if it's built into the protocol, how could a protocol comply with the AFR? So that's a very interesting proposition for an accountant or even an inspector or regulator. So I am downright fascinated with Samsara and how it's going to play out. And frankly, if that's what the protocol is built as, and it offers 0% interest rate, and I don't have to claim that as income because it's credit, I'm cool with that, and I will report my accounting as such because I didn't receive income. I borrowed money, and that's the whole point of the protocol. Inside of the contracts, it's designed such that you're not claiming. It's not income. It's not a claim. You're borrowing at a 0% interest rate with no liquidation. And that means it's not income. So it's very, very interesting what they're building, to say the least. I got no problem pushing the rules as written by Congress to the edge of what is reasonable and rational. I got no problem at all. Because two things: one, I know how to use AI to write documents, and two, I know how to read de novo the laws, rules as written by Congress pretty damn well. And then when you combine my capacity with AI's, all right, do some pretty interesting things. I got no problem pushing that boundary. If V curve holders will share 35 to 65% return yields, it will be cool if they were paid in not only stables but fractional BTC, which is an appreciating asset. Uh, my 2 cents, I'm going to pop BTC on yield basis, and I'm probably going to take YB. That's my 2 cents. I'm not even going to take compounded BTC. I appreciate Bitcoin for what it is, and I treat it as a cash, and I want a certain amount, but I also appreciate technology. So I want to have the Bitcoin in a impermanent loss free yielding LP implementation, which is the offering of yield basis. But I don't want the Bitcoin in cash flow. I want the yield basis because I'm interested in the technology, and technology should outperform money, including Bitcoin, over time. Um, but the whole point of then the YB is to get revenue, and that revenue in turn you can buy Bitcoin. So I'm cool with a couple of different ways to look at it. So very reasonable statement, you say, Joel. Speaking of yield basis proposal with my last statement, yes, certainly. Seasick Viking cap, if you ever want to trade native dot, it's supported by Maya protocol, which is a friendly fork of Thorchain. Any Maya front end can do it. ThorSwap, Leo, I don't trade. What if I could take dot? It's not the position size that I really care about. It's staking. It's literally staking an just raw Polkadot. It's been staking for years and just raw base layer Polkadot. Yeah, look, it's up here. Okay. Oh, you don't see the pop up, but there's your not plat. Here's this old school, the little Polkadot guy. See him? So there's your Polkadot network. Whatever. I'm just not excited about it. Just have it. Some shit you throw in your back pocket, and maybe it becomes interesting in a couple years. Privacy like tornado, cash flow for stackers. Well, like a railgun. That's interesting. 20% APR use upsize potential while is legal gain. 20% is 20% is 20%. Again, 20% from Velo, 20% from Arrow, 20% from V Curve, which you're not right now. It doesn't matter. It doesn't matter. Maybe again 20% from a real estate investment. All that matters is 20%. And then you think about principal evaluation because what cap rate? Cap rate is a traditional term in real estate. And you're like, what's the cap rate? Which is basically APR on spot price. So the APR on spot price on Aerodrome is 30%. But guess what? I'm not too interested in the cap rate. Old school real estate inspection, I'm much more interested in APR on basis than APR on spot. So I'm kind of getting like 80% APR on basis on Aerodrome. I like that much more. If you buy 100 grand worth of something and you're getting 50 grand in revenue per year, that's 50% on basis. If you buy 10 grand worth of something and it becomes 100 grand in principal and it's producing 50 grand a year in revenue in the future because the whole system expands, you're getting 500% APR on basis. I like that inspection much more. APR on basis rather than APR on spot. Ladies and gentlemen, let's wrap it up for today. That is what it is. I hope that is a useful, informative, potentially entertaining conversation to tell us where we are on what people on social media are probably calling a day of capitulation, and they couldn't be more wrong, in my opinion. You're very welcome, Peter. Friday, October 10th, 12:42 p.m. 271 people made it to the end of the stream. I appreciate each and every one of you, and you are all now that much more rational because of it. Stay calm, cool, and collected over the weekend. Make your way to a sauna. Definitely do some exercise, and I will see you guys and gals next week. Until then.